Hello and welcome back to All Things Money. I'm your host, David Blain. Thank you for joining us today. We're in the middle of our discussion on the value of a good wealth planner and what they can provide beyond the technical aspects. You know, most people think of investment advisor, wealth planner, technical and getting some big rate of return, or like we do, have very sophisticated tax planning. Well, there's no magic bullet. I mean, we can work around the edges and help reduce that tax bill, but there's no magic bullet that's going to take somebody from paying $50,000 in tax, down to zero without cheating or doing something like that. But there are some very valuable things, sort of the intangibles beyond that most people are not aware of. So the first thing we started talking about is just getting a handle on everything. Today's society is so complicated. 50 years ago, most people didn't have any investments. They had maybe a passbook savings account at their bank, and maybe they had a life insurance policy, and that was it. And there wasn't, the taxes were very simple. Well, they were simpler than they are today. But the things were much simpler. Well, today everything is so complicated, and your insurance policies, just for your home are 3 inches thick, and the taxes are changing the rules every day, and investments, you got 401ks, Roth IRAs, regular IRAs, stuff. It's very complicated. Just getting a handle on that is a valuable service. As we were finishing up the last segment, I talked about a client of ours who passed away last year that thought he had 2 insurance policies, and when he died, we were able to find he had about 17 insurance policies, and he didn't know where they were, and the bills would come in, and I guess he was just paying it. Some of them were probably fully funded, but so not only do people not have a handle on what even they own or owe, but they don't know how much these things cost. If you ask the average person, well, what do you pay for your homeowner's insurance a year? Well, they don't know because it's part of their mortgage payment. It's escrowed, and so they don't even know what they're paying for homeowners insurance. Just little things like that, getting organized, your refinancing of the mortgage. People are wrapped up with home and work and family and things like that. Just getting a handle on everything, having somebody that knows the situation. I would say that, out of the about 100 families that we work with, we know their financial situation. 90% of them, we know their financial situation better than they do. And that's our job, is to be the repository of that information, sort of to manage it all, get it together in one coherent picture such that you can make decisions from it. The number 2 thing that I'd like to talk about is the portfolio, and this is the one thing that people always zero in on. They think it's the most important, and it's very important, but from a slightly different angle. Most people are looking for that person that is going to make them 20% a year, or that has the secret that is going to make them, a multi-millionaire overnight. It doesn't exist. That when it does, it's sort of a random occurrence. That the value of creating a portfolio is creating a well-diversified portfolio. Now, we happen to create portfolios that focus a lot on the risk management. We don't like to lose money. And it's been shown time and time again, study after study, that people that work with a competent financial advisor do, in fact, achieve better rates of return than if they did it on their own in aggregate. Now, I know there's people, like if I wasn't in this business and I did it on my own, I would do better than the aggregate person. So I'm not saying that there aren't people out there that don't do okay. But the reality is, if most people are honest with themselves, they do not do a very good job of managing their own investments. And so by bringing all the different pieces of the puzzle together and creating a well-diversified portfolio with a heavy dose of risk management, we're able to outperform 95% of the people that choose to do it on their own. Once again, we're not talking about the mutual fund or the hot manager that you see on CNBC that jumps up in the ratings for a year or 2 or 3 and has the secret until the secret no longer works. Paulson's a great example, the guy that made like $15 billion in 1 year on the mortgage downfall a couple years ago. Well, he went out and started a hedge fund. Well, guess what? Last year he lost like 50% of his clients' money. So he made several billions betting against the housing market and says, gosh, I must be smarter than everybody else. I'm going to go set up this hedge fund, take people's money in, and he made some bets on gold and some other things. And anyway, he lost 50% of his clients' money. We had a client come to us the other day who came in, and last year the markets didn't do very well. I mean, the S&P 500 was basically flat for the year. The guy lost 50% of his money, but in the past couple years, you know, the guy had been picking the hot investments and had done very well, but in 1 year, completely wiped it out. So the value that a good wealth planner is a steady portfolio, you know, constructed based on well thought out principles and a heavy dose of risk management. In our firm, we do believe that you should preserve capital in certain times. The problem is the average investor out there waits until the market hits a bottom and then they say, oh, I can't take it anymore. They sell out and they don't get back in for a year or two. Where our process is designed to look into, you know, and say, okay, well, the market is very volatile now. We choose not to participate at certain times, but there's a very set process, disciplined process based on years and years and years of studies and work of other people besides us to manage the risk of the portfolio. It's not based on some emotion, which is how most people manage their portfolio. So that's the second benefit, is having a good, solid portfolio construction. Well, that brings us to our second break. When we come back, we'll continue talking about some of the value that a financial advisor provides.